morning, everybody. This is welcome to the Moving Markets Podcast. This is Jeffry Dunyon. It is Thursday, July 17th, 2025. The stock market has been open for about 30 minutes as of right now, and all three indexes are doing well this morning. It's kind of the same batch of news. It's optimism about where things are headed economically. It's a little bit of the administration's spin on how things are doing with the tariffs and how things are going with trade deals. And then there's some earnings news that is helping to push things along. This is going to be a really, really short podcast. I'm going to give a quick update on some things that I am working on. I'm not going to comment much more about what the markets are doing right now. You can see here that all three indexes are in fact up, and this is good. We like this. Dow up 140, S&P up 16, NASDAQ up 93. That's a good start to the morning, and we hope it continues throughout the day. I'm going to focus on a couple of things that we're doing with trades that we have open. And like I said, I'm going to be brief. I'll do something a little bit longer tomorrow morning and talk more about the week. To start out with, let's go right to the Johnson & Johnson trade that we opened on Tuesday morning. We got out of with a very nice profit yesterday. Everybody should be out of this Johnson & Johnson trade with the profit you were looking for, or even a little bit more. It was a fantastic trade. Only open for a couple of days. Johnson & Johnson moved more than enough to get us up to our target profit. And part of the reason we reached that target profit so quickly is that we got a really good fill price getting into this trade. So we had a great risk to reward ratio on this one, and it made for a fantastic exit on the trade in a fairly short period of time. Our CoreWeave trade, CoreWeave continues to sell off a little bit, but this is a longer term trade. And as of the close yesterday, we were still a little bit profitable because the shorter term short call has lost money so much faster than the longer term long call has. So CoreWeave, in spite of being down, and it's only down a little bit more today. It's had 3 days that it bounced back up, down a little bit today. What was a support line right there around 145 is obviously becoming a little bit of a resistance line. I think CoreWeave will push back over that in the next few days, and so I'm just sitting tight on this trade. Not going to do anything with this one for right now. CrowdStrike is another story. We've got a CrowdStrike spread trade in the main SOS portfolio. That is a longer term trade. The options are out in October. I think by the time we get there, CrowdStrike is going to be back well above 510. That's where the short call strike is at. Again, because it's clear out in October, I'm just not worried about that one. I know it's down right now. I know it looks a little bit ugly. What is much more concerning is the CrowdStrike trade that we have in triple play, in the triple play portfolio. In the triple play portfolio, we have an in-the-money bull call that for a second week in a row, as of this morning, I am trying to roll both options straight out in time and leave them at the same strike price. I do not have it updated in this screen that you're looking at right now in this spreadsheet. I will get that done this morning. I will get that updated. But CrowdStrike concerns me not only because of the big drop that they made, but they're holding support right here at 470. They're testing it. But I don't love that they continue to test it. I really think a bounce is coming. I really think we're not far from getting a bounce on CrowdStrike, and I don't think it's going to take very much for them to get back above 490. They could even do that without really breaking through what is the only resistance level above them, which is right around 490. So they could get back up to 490 pretty easily. As of the time I started this podcast, my trade on CrowdStrike had not filled yet. If CrowdStrike doesn't bounce a little bit today and finish above this 470 mark, I'm still going to try. I'm going to leave the adjustment open throughout the day. But if CrowdStrike does not manage to finish back above 470 today, they're a little tiny bit below it right now, only by about $1.50, and they can reverse that in short order very easily. But unless they manage to finish above 470, I will end up doing a different adjustment for tomorrow. And don't worry if your trade fills today and your options are stretched out to the end of next week. We'll address that. If some people get filled and some people don't, I don't want that to be a worry or a concern. We'll take care of and address that. That'll be an easy one to fix. But for right now, we're just trying to take both options and roll them straight out in time, leaving them at the strike prices that they're at. We'll just get them out 1 week in time. So that's what we're doing with CrowdStrike. The other trade that is concerning me right now is the JP Morgan trade. Long iron condor on JP Morgan, and as of right now, you can see that we're taking about a 50% loss on this trade. JP Morgan, I got to tell you, if this were a chart for someone's vitals being hooked up in the hospital, they're flatlining and the patient is probably dead. I'm very frustrated that JP Morgan is not picking a direction. They're staying very flat relative to where we're at. And the concern I have is that if we make there's an adjustment that we could make on JP Morgan that's, believe it or not, a fairly simple adjustment, and it can be a very effective adjustment to cut way down on the potential loss on the trade. It doesn't guarantee a profit on the trade. You can basically take the 280 short put, roll it straight up. We could go straight up to 270 or 287.50. We could take the 292.50 and roll it straight down, probably to the 285, leaving in the expiration that they're in. And what you do is you create a condor trade that is, you're basically trapped. You're guaranteed with a $2.50 loss if the stock finishes above your short put strike or below your short call strike, but you take in a really big credit, and so the credit eliminates 100% of what you. Let me explain this. Let me go to a different chart to explain this really quickly, because I know a lot of newer members of the program have never made an adjustment like that. We've got a short call right here, a long call right here. We've got a long put right here and a short put right here. The adjustment would be rolling this short put up and turning this, changing it basically from a bear put to a bull put, and then at the same time doing the same thing with the call side. You roll the short call down, and you create a bear call instead of a bull call. What you end up with is, I'm going to label these. You end up with your long call right here and your short call right here, and your short put up here and your long put down here. So you've got this, that's supposed to be a put, sorry. So you've got this bull put spread and this bear call spread that are kind of overlapping each other right here. And if you finish higher than the bull put strike or lower than the bear call strike, that $2.50 gap that you're creating in between those, that is actually a guaranteed loss of $2.50. But we originally took in $3.90. Okay, we've lost about half of that right now. So right now we're setting at about $1.95 loss if we just exited the trade right now. We can take in over $4.50 on this trade. And by taking in $4.50 credit, this is if we make the adjustment. If we roll the short put up here and the short call down here, we can take in $4.50 or more. And when you subtract that from the $3.90, you end up with a 60-cent credit. Well, that 60-cent credit doesn't change things much. You subtract that 60-cent credit from this, and you've got a $1.90 loss. And you look at that and say, what's the difference between the $1.90 loss and the $1.95 loss? There's only 5 cents difference. Why would I go through all this trouble if I could just exit right now for a $1.95 loss, or guarantee a worst case scenario of a $1.90 loss? Here's the reason why you do it. This is a guaranteed worst case scenario loss. I'm going to clear all of this off right now. That $1.90 becomes a worst case scenario. That's the most you could lose under any circumstances is $1.90. I understand I hate losing money on a trade, so this entire adjustment is predicated on taking the least impactful loss we can. But if if I have a short put at 287.50, let me fix that. If I have a short put at 287.50 and I have a short call at 285, if I'm above 287.50, I take that $1.90 loss. If I'm below 285, I take that $1.90 loss. If I'm anywhere in between this, anywhere in between, and if I were to hit the midpoint in between, let's say hypothetically we ended the trading session, what would that be? 286.75, I think, would be the halfway point between them. Maybe 286.25 would be the halfway point between that. Instead of having a $2.50 loss above the short put or a $2.50 loss below the short call, I would only have a $1.25 loss halfway in between them. And then you subtract the 60-cent credit that we took in on the overall adjustment. It changes our cost basis to 60 cents. All of a sudden, we're only losing 65 cents a share. So 190 becomes the maximum worst case scenario loss. But any finish in between where our short put ends up and where our short call ends up lessens this loss and could potentially take it down to as much as 165, or excuse me, 65 cents. So we're guaranteed a loss somewhere in between here, but it's guaranteed not to be worse than this. So I really, I don't love this adjustment. This is kind of like your backup parachute adjustment. This is when you have no other option. You're either going to splatter into the ground and take a complete 100% loss, or you can minimize the impact as much as possible and take as small a loss as possible and live to jump another day, so to speak. Maybe a parachuting analogy is not the best one, but you kind of live to play another day. The challenge with this adjustment is today or tomorrow, JPM could just suddenly have a break out of this little range and go far enough down to get us out of hot water or far enough up to get us hot water. And you hate to make this adjustment and then you just miss the jump to the upside or the collapse to the downside. And so kind of like with an emergency parachute, you wait and wait and wait and see if that regular parachute, you give it as much time as possible to open and to give you that perfect landing. So it's a tricky one. On this one, I can't wait until the end of the day today and do this tomorrow morning, because we might not get nearly as big a credit if we wait until tomorrow morning. But I'm just watching to see, does anything happen in this early part of trading today? I mean, already JP Morgan opened up to the downside, and I got really hopeful when they opened to the downside. I thought they've only got a couple more dollars to go down and we could probably get out of this trade with a break even. And then within 5 minutes of the market being open, they reversed, and now they're trading almost at their session high today. So already, in spite of this looking like a dead flat line right here, they've already moved in a range that's almost $5 from the top to the bottom. In fact, maybe they have their low of the day so far has been 283 and their high 289. They've already moved $6 from the high to the low spot. So another $6 move to the upside, or a reversal and a $6 move to the downside could actually put us in a position where we would not take as big a loss. So I hate what JP Morgan is doing right now. I hate that they're stuck in the middle on this. And listen very carefully. If you're on live with me right now, or if you're listening to this shortly after the recording of it, listen very carefully to this last thing that I'm going to say. There would be nothing wrong with just getting out right now. I went through all of that to show you that right now the loss is about $1.95. If we make this adjustment, our worst case scenario would be $1.90, and it might be easier for you to just say, you know what? I lost about half on this trade. I've made a lot of money on a lot of other trades. We did fantastic on Johnson and Johnson on really short term. TSM is looking great. It looks like we're going to get out of that trade probably with our full target profits. Some of you might be out of it already. TSM having a nice big move today, and it's in the money. And I got close to getting filled right at the open of the market on TSM. It didn't quite get there. The mid price went over my target exit price a couple of times, but didn't quite get filled. But we've had a great run. We had good trades last week. We've had good trades this week. You may just look at that $1.95 loss on JP Morgan and say, I'm out. I'm not going to mess around with this. I'm not going to stay in. But whatever I do with JP Morgan, I will make a decision on it within the next 2 to 3 hours so that we still have about half of the trading day left. It might be within the next 10 or 15 minutes after I finish recording this, but we'll get that one taken care of. So I got to wrap up right there. That I actually went a little bit longer than I thought I would because I took a little more time to explain the adjustment on the potential adjustment on JP Morgan. But keep an eye on Discord as much as you're able to today for that JP Morgan trade. Or if you're listening to this right now and you just don't have the ability or don't want to watch the market throughout the day, pull the ripcord, bail out right now. Just exit it, take the loss, live to play another day. All right, everyone, I hope you have a great rest of your Thursday. I'll be back on tomorrow morning about the same time to wrap up the week. Until then, thanks. Have a great day. Bye-bye.